Well, Corelogic did it yet again. For the fourth consecutive month, Corelogic revised downward their latest 12-month housing market forecast. In today's video, I'll share the latest real estate market predictions, but also share the top 5 cities in which they believe home prices will decrease the most over the next 12 months. I have a lot to share in today's video, but before we get started, if you guys want a real estate agent referral or a mortgage advisor, check out my new website, which is realestateteamfinder.com. I'll personally call you to learn about your real estate goals so I can best match you with a great real estate agent. That's realestateteamfinder.com. With that said, I appreciate you guys joining me in today's video, so let's go ahead and dive right in. This was a report just announced today, which is October 3rd. It says here for the month of August, it says here home prices nationwide, including distressed home sales, which is defined by a foreclosure or a short sale, increased year over year by 3.7% this August. On a month-over-month basis, home prices increased by 0.3% compared to July this year. So a lot of you guys asked me, how accurate are their previous forecasts here? So I did some digging for you guys because, again, prices increased by 3.7% this August compared to August last year. So their forecast from 1 year ago is this right here. This is their forecast posted 1 year ago for the forecast through this August here. Anyways, a 3.2% gain was a forecast posted 1 year ago here. So their forecast of 3.2% is very, very close to what actually happened, a gain of 3.7%. Before I share Corelogic's latest real estate market predictions through August of 2024, here's their previous forecast ever since January this year. So in January this year through January 2024, their real estate market predictions was a gain in home prices up by 3.1%. Then in February, that was the third consecutive upward revision, a gain of 3.7%. Then in March through March of next year, they were forecasting a gain of 4.6%. That was the fourth consecutive upward revision of their forecast here. Then in April, it was flat. So 4.6%, which is flat compared to the previous month. Then the next month in May, they actually had a slight downward revision going from 4.6 to 4.5%. Then in June this year through June next year, they predicted a gain of 4.3%, but that marked a slight decrease compared to the previous month. Then from July this year through July next year, they predicted a gain of 3.5%. That was a fairly significant decrease compared to the previous month and also marked the third consecutive downward revision. Now here's their latest forecast though. This is August 2023 through August of 2024, a gain of 3.4%. That marks the fourth consecutive downward revision of their 12-month housing market forecast. They were also predicting that home prices based on their HPI or their home price index will increase by 0.2% from this August through September this year, and also a 3.4% through August of 2024. Also, according to Corelogic's chief economist, she stated the following. Corelogic's HPI dropped to an 11-year low in the spring months of 2023. I believe she's referring to the percent decrease on a year-over-year basis that we saw in the spring months this year compared to the spring months in 2022, of course. But that was when we saw prices really fall compared to 1 year ago to the lowest levels going back to approximately 2012, 2011. In other words, we had an approximate 11-year run in which prices nationwide were increasing compared to the previous year. In any case, she says here that this price gains is starting to regain momentum, with some states in the West still posting annual decreases in prices this August, but that number has been decreasing since the spring months this year. Meanwhile, housing markets in New England are starting to heat up. So for example, in New Hampshire, Maine, Vermont, and Rhode Island are seeing the largest year-over-year increases in their HPI this August. However, though, she stated the following. While continued mortgage rate increases challenge affordability across the United States, of course, home price growth is in line with typical seasonal averages, reflecting strong demand bolstered by a healthy labor market, strong wage growth, and supporting demographic trends. Still, with a slower buying season ahead as we approach the holidays and the surging cost of homeownership, additional monthly price gains may taper off. In regards to her quote here saying we have home price growth is in line with typical seasonal averages, I don't know if she's talking about year-over-year changes or month-over-month changes. Actually did some digging for you guys to try to find a chart showing Corelogic's HPI over the long run. I couldn't find a really good one. I look on our good Uncle Fred here, couldn't find it. So instead, I'm going to be relying on the trends we're seeing right now based on the median sold price this August, according to the National Association of Realtors, to see whether or not we have normal historical trends here. So on a month-over-month basis, based on my analysis here, the median sold price nationwide increased by 0.3% compared to July. This is data from NAR based on my own analysis here. That is a fairly significant increase compared to the 1.1% decrease, which is the historical July through August month-over-month change going back to the year of 2010. So historically speaking, we should expect to see prices decrease by 1.1%, whereas this August, it actually increased by 0.3%. In contrast, though, the year-over-year changes, though, is actually a lot softer, though. So the year-over-year change, this is August this year through August last year, was a gain of 3.9% versus historical averages going back to the year of 2010 is an increase of 6.4%. So just taking a step back here, based on the median sold price nationwide, the gain we saw this August compared to July is much better, or not much better, is better than historical averages, but the year-over-year change, only an increase of 3.9%, is much worse than the 6.4% we should be expecting historically speaking. So going back to Corelogic report here, her quote here is saying that home price growth is in line with typical seasonal averages. Again, it depends on which time frame, of course, which source she's referring to. Again, I'm probably we're talking about the home price index, but I can't see historical trends based on that. Anyways, let's move on. Here's a look at what happened this August compared to August of 2022. Because again, on a national level, the home price index increased by 3.7%. There actually was 8 states in which prices decreased compared to 1 year ago. Those states were Arizona, Idaho, Montana, Nevada, New York, Texas, Utah, and Washington. In contrast, here are the top 10 states that had the highest increases in prices year over year. Leading the nation is actually in New Hampshire, a gain of 9.4%. Maine increased by 8.9%, as did Vermont. Then we had Rhode Island, New Jersey, Connecticut, Wisconsin, Missouri, Indiana, and Ohio. So it's important to note here that there was not a single state that recorded a gain of over 10% year over year. Now look at the same chart from 1 year ago. This is the change from August 2022 compared to August 2021. 9-day difference for the states, and also the giant increases in prices compared to what we're seeing right now. So for example, in Florida, a giant increase of 29.6% year over year, whereas Florida is not even the top 10 right now. Also going back to 1 year ago, the vast majority increased by more than 20%, where again, this year, there wasn't a single state that recorded an increase of over 9.5%. And here's a map regarding prices compared to August of 2022. As you can see here, you basically can split the US in half here. The western states, excluding New Mexico, are recording the smallest increases or decreases year over year, whereas the Northeast and the Midwest are experiencing the biggest increases in prices right now. Corelogic also provided the percent change in prices for the top 10 US markets here. And here's what they had to say 1 year ago. Every single one of these markets, except for Chicago, Washington, D.C., and Boston, increased by more than 10% compared to August of 2021. In fact, the biggest increase was Miami, increasing by 27.1%. Also, much of the West increasing by double digits. Now, here's what the map looks like today, though. This August, night and day difference. Miami, Florida is still doing very well, though. The biggest increase out of these 10 metros here, but not even close to the 27.1% we saw 1 year ago. The decreases were actually in Las Vegas, down by 2.9%, and Phoenix fell by 1.9%. Quite a bit different compared to what happened 1 year ago. 17.8% gain in Las Vegas, and also the same in Phoenix, Arizona. Also in San Diego, prices increased by 4.3%. Los Angeles increasing by 1.3%. Denver fairly flat. Houston barely squeaked out a gain, whereas Chicago is up by 5%. DC is up by 4.1%, and Boston, Massachusetts increasing by 3.7%. Corelogic also announced the top 5 US markets in which they believe prices will fall the most over the next 12 months. And by the way, each of these 5 metro areas is a very high probability, above a 70% probability, in fact, that prices will decrease over the next 12 months, according to Corelogic. Leading the nation here is actually in Spokane, Washington. Then we have Cape Coral, Fort Myers, Florida. Then we have Youngstown, Warren, Boardman area, which is in Ohio and Pennsylvania. Number 4 spot is in Ocala, Florida. And rounding out the top 5 is Deltona and Daytona Beach, Florida. So thank you so much for watching today's video. Also, check out that link below if you guys want a real estate agent referral, or go to realestateteamfinder.com. I appreciate you guys watching today's video. Like and subscribe, and I'll see you in the next one.